Minasan, konnichiwa, Samurai Engineer desu. In this video, let us talk about module number 5 of chapter 1, Managerial Accounting and Cost Concepts. Learning goal in this module: prepare a schedule of cost of goods manufactured. Okay, very important. Let us listen to this lecture so that we may be able to do it on our own. Schedule of cost of goods manufactured. It calculates the cost of raw materials, direct labor, and manufacturing overhead used in production. That is cost of goods manufactured. Calculates the manufacturing cost associated with goods that were finished during the period. Okay, so very simple definitions. Schedule of cost of goods manufactured. First, we have take a look at the raw materials. Beginning raw materials inventory plus raw material purchase is equal to raw materials available for use in the production line minus ending raw materials inventory, and therefore we have what? Raw materials used in production. Okay, so as items are removed from raw materials inventory and placed into the production process, they are called direct materials. So raw materials used are direct materials. Okay. Now let us continue. So manufacturing cost, therefore, we can use that direct material. So how much is our raw material used in production? Then how about adding the direct labor with conversion cost or cost incurred to convert the direct materials into finished product. Okay, that is conversion cost. Okay, they are the cost that converts the direct materials into finished product. As items are removed from raw materials inventory and placed into the production process, they are called direct materials, as we just explained the previous slide. Okay. Okay, let us look at the next one. Work in process. Work in process, those are the current materials that are not yet finished, but is gaining raw materials, and parts of it, some percentage of which are already forming into the finished product. Okay. So work in process, beginning work in process inventory plus total manufacturing cost. So we have the total manufacturing cost. So let us add. Therefore, we have total work in process for the period. Okay, because we have what? The current manufacturing cost, direct materials and direct labor plus manufacturing overhead. So all manufacturing costs incurred during the period are added. Okay, the total manufacturing costs are added to the beginning balance of work in process, so that we have what? Total work in process for the period, for the accounting period. So if you are computing this monthly, so your accounting period may be monthly, or you can also have what? Weekly. So it depends, because we are looking at the accounting, but we need it because we are emphasizing what? Decision making, so timeliness. Okay, our reports are live in time. In time, we can even have daily. We may even have daily computation because maybe daily data is important for decision making. So, schedule of cost of goods manufactured. Let us continue. We have the total work in process for the period minus ending work in process inventory. And that is the cost of goods manufactured. So, cost of goods manufactured, let us subtract the ending work in process inventory. How much? Okay, for that. So let us account for the ending work process inventory. Costs associated with the goods that are completed during the period are transferred to finished goods inventory. Associated with the goods that are completed during the period transferred to finished goods. So dynamic every hour there are what? There are goods being finished and there are raw materials coming in. So it is dynamic. Okay. Cost of goods sold. What about it? So from the work in process, okay, so we have what? Sequence. So this is what you can go back. From the raw materials, we computed all of this. We computed this one, then go to manufacturing cost, then total manufacturing cost, go to the work in process, and then total work in process. Then we have cost of goods manufactured, then finished goods. So let us add finished goods, beginning finished goods inventory plus cost of goods manufactured during the period is equal to cost of goods available for sale minus ending finished goods inventory. So that is cost of goods sold. So those goods that are already able to offer and sell to the clients. So we have what? Manufacturing cost, floor cost, material purchases. So there are some expenses that we are calling cost. No? Balance sheet inventory, because we have the raw material. The raw material is equivalent to the amount of material, no? The cost. No? And then let's add the direct labor and manufacturing overhead. So the cost are the three major manufacturing costs, no? Three categories. And we have what? In balance sheet inventory, we have raw materials and work in process. Okay, next, finished goods. Okay, you can compute by adding raw materials, work in process. So there is what? Sequential. We cannot do work in process without doing raw materials. So first, you have to compute material purchases. So how to compute? Collect all the receipt and add all the receipt, the record. So record, just like what we are doing in financial accounting. Okay. So then work in process, then finished goods. Then afterwards, we have cost of goods sold, which is under income statement. expenses. Okay. And then, so we have the finished product, but we will have another type of cost, which is period cost. Okay. Period cost, which is the what? Selling and administrative cost. Selling and administrative. So we already explained what are these: selling cost and administrative cost. These are the two types of non-manufacturing cost. Okay. You have to add, then let us review. Let us compute. Beginning raw materials inventory was 32,000, and during the month, 276 of raw material was purchased. Beginning of inventory and purchase, we have to add 32,000 plus 276, that is 308. Is that 308? 308,000. Account at the end of the month revealed that 28,000 of raw material was still present. What is the cost of direct material used? Okay, let us minus. Let us subtract. And therefore, if you subtract, we have about 280. Is the answer 280? Let us take a look. It's correct. It's correct. So, as simple as that. Simple as that. Another example, direct material use and production is 280. Okay. This is the next step. No? Direct labor 375. So we have to add. And factory overhead 180. So we have to add 180, 280, that is 460. 460 plus 3 is 760. So 835. 835. What will total manufacturing cost incurred from the month? So 835. So I think that's letter B. Okay. So 835, correct. So 835 is the correct answer. It's not letter C. That is wrong. No? So let us continue our example. Beginning work in process was 125. Work in process, that is the next step. No? Work in process. Manufacturing cost incurred for the month 835. There were 200 of partially finished goods remaining in work in process inventory at the end of the month. So what was the cost of goods manufactured? So 125, let us add the 125 to 835, that is what? 960. 60 minus 200, 760. So 760. Okay, that is the answer. Let us again go to the cost of goods manufactured and cost of goods sold. So inventory beginning 130. The cost of goods manufactured for the month was 760. So let us add 760 plus 130 is 890. The ending finished goods inventory was 150. So 890 minus 150, that is 740. 740. So as simple as that. So that is how we compute it in sequence. So there are so many concepts, there are so many formulas that you have to do, but the formulas are straightforward. It is easy to understand. Again, This is Dr. DrEYPEI preaching engineering for nation building.